In this presentation, we'll take a look at the creation and analyze the effect of an invoice within the customer section. Time to get set up with Sage 50 Cloud Accounting. Here we are in the customer and sales section of our practice problem. Now note that I have moved over to the actual software for Sage because I do want to look at some of the features, including some of the reporting features and exporting features within it that we can't do in the demo version. But you can still follow along within the demo version, and that's what I would suggest. So we're in the Sage 50 Accounting Bellwether Garden Supply. This is the actual software within the demo version within the software, the demo company, as opposed to the demo kind of mock system software of the Sage 50. But you should be able to follow along with the free version of the software. We're going to be continuing on with the customers and sales section. We want to think about the major forms within it. Now we're going to be looking at the sales invoice. The sales invoice is going to be one of course, the major forms, that typically being the type of form that will be filled out once we do work for somebody, and then we bill the client basically, and we're going to receive payment at some point in the future. There's a couple things we want to know about each of these forms. One is, how do we do the data input into the form? The data input, however, should be one of the more easy types of things to do because once we set it up properly, we want basically anybody to be able to do the data input portion. So then we want to think about, well, how would the invoice be set up so that the data input would be as easy as possible? And what's the invoice going to do with regards to the financial statements? What type of financial statements will be affected on the major financial statements, that being the balance sheet and the income statement? So let's go to create a new sales invoice. We'll make a new sales invoice here. Note as we open up more windows, you can see multiple windows open, and that would typically be in the desktop version, so on your desktop, right? So I can see multiple windows down here as I go into the software, and then we can be toggling back and forth between those windows if we so choose. So I'm going to maximize this screen. Now the things that we would of course have to set up for the invoice is we're going to need a customer, so we'll need the customer up top. We're going to need items. Items are going to be driving the type of account that it will be set up. So let's just kind of tab through this and add our fields as we go. So I'm going to say new. I'm going to just pick a customer that's already set up. I'm going to try to pick the first customer most of the time, which is Aldred Builders. So we're going to be picking that up. And then note what will populate for us because the customer's already put in place the ship to, and the address is going to be populated for us because of course that was set up with the customer. Now if it wasn't not set up with the customer so at this point in time, then we would have to add a new customer at this point in time when we create the invoice. And note you can do that if you select the invoice up here and we want to have like a new customer over on the side. But I'm going to be picking the first item here, so let me do that one more time. We're going to say we want the first one. So we'll pick that up and then we'll continue tabbing through here. So the invoice date, then we have March 15th, 2020. So I'll go ahead and keep that. We'll say March 15th, 2020. The due date then, April 14th. That's by default. So we set the terms are going to be set. And so the terms are going to be set automatically for us. And then if we keep, we're going to say ship via, we'll keep this as is. The terms, 2%. So 2% discount if paid within 10 days. If not, 30 days. I'm not going to get too detailed into the terms here, but that's kind of how you would read the terms. I'm going to go to the second tab over here because we're going to apply to the sales. So we're going to apply to the sales, and then we're going to enter our information. I'm going to say we have quantity, let's say 3, and then let's just pick an item. So I'm going to pick an item up top. I'm going to pick the birdhouse kit. I'll try to pick the first items as much as possible just to make it as easy as possible. Notice how this flows into our data input screen automatically. So we have the assemble redwood 12 room birdhouse on 14 floor pole. So purple and then the birdhouse and so on and so forth on the description. So that's going to be our description. Now where did it populate that information? It populated that information because we already had the item set up. So note how easy it is to basically set this information up. Whatever our inventory item is, then we want to set them up as the item. So when someone does the data input, they can do this as easily as possible. They may have to set up a new customer if it's a new customer, depending on the type of organization. Or if it's the type of organization where we have existing customers, then we can set up that customer automatically, and that should populate automatically for us. Then we can pick up the invoice information in terms of what we typically sell, whatever it happens to be. In this case, the redwood, the birdhouse, but it could be anything that we happen to typically sell. It might be a service item or inventory item. So if we just sold law services or something like that, or bookkeeping services or landscaping, then it could be that type of service item. You want to think about how you're going to be setting up those service items, because even if it's something like a time type of thing, then an hourly rate isn't always the best way to do it. Or even if you have the hourly rate, you might have different hourly rates depending on the people within your organization. So what you would like to do is set up a separate item for that rate. Now, when you sell inventory, it gets a little bit more complex, because then you're going to need the item of inventory and track, if you're tracking on a perpetual system, the inventory within the system as well. So let's think through this a little bit further. We're going to say the tax is 1 on the tax. So if the tax would be affected, then it would be calculated on the tax. As we can see down here, we're going to say it's going to be a sales tax or value added tax. So here we have it. And so we have the $389.97, and then we got the tax going to the $23.40. So that gives us a total of the $413.37. Now remember, to us, this is going to be an invoice. When we send it out to the person receiving it, it's going to obviously be a bill on their side of things. Now we want to think about, so we've thought about kind of how to build this thing. We're going to need to know about the items, which we'll talk about later, and obviously the customers in order to build it. Now we want to think about what it's going to do when we ship it out. Notice I can populate this thing without knowing how to really get the item or even the customer, how to input that information. And I don't really need to know what happens to the financial statements. Let's think about what will happen to them, because that's what you want to do every time you make a form. So the financial statements then you would think would be going up by the $413.37 on the accounts receivable. That's what an invoice is. It means someone owes us money. Then the other side is going to be on the income statement, but it should only be for the amount that we're going to receive. That's going to be the $396, or we get to keep, not including the tax, the $389.97. The difference is the tax. That's going to be sales tax. That typically will increase like a liability account that we owe money to the government. And then and that's all that would happen if it were a service item. If it's an inventory item, then we're also going to have to track the inventory if we're using a perpetual inventory system. That means that the system will help us to track that with the use of the invoice. It will then be decreasing the inventory by an amount that's not even on the invoice, right? The invoice you don't even see the cost of it, because we're giving the invoice to a customer. So we don't have the cost of the invoice on it, but the system knows, given by the item. The system knows because of the item, and we'll talk about this later, what the cost is. And therefore, if we're on a perpetual system, it'll decrease the inventory as well, both on the financial statement in terms of dollars and supporting reports for counting the physical count of the inventory, and record the other side of it, which is the cost of goods sold, which is the expense of us consuming the inventory. Net effect then on the income statement is going to be this amount, the $389.97, minus whatever the cost of goods sold will be. So now let's go ahead and save this. So I'm going to say save this information, and then I'm going to close this out. And let's open up our financial statements now. So I'm going to go to the reports up top, and then I could just go down to the financial statements. I want to go to the financial statement reports. I want to take a look at the balance sheet and the income statement. So these are kind of like the standard reports that would be given here when we generate our reports. I'm going to be opening up the balance sheet. Let's open that one up. I'm going to choose a custom range. I'm going to say the range is going to be custom, and I'm going to have it from January to, let's say, period 1 to period 1. Let's make this out to period 12. So I'll bring this out to December of 2020. So let's keep that. Note down here, I'm not going to show the page numbers, and I'm only going to show zero amounts. If there's a zero amount in it, I don't want to see it, so I'm not going to show the zero amounts here. So I'm going to keep these unchecked. That'll make the report a little bit smaller, easier to navigate through. So I'm going to go ahead and say OK, and we'll print this one out. And there it is. So there's our balance sheet. Now let's open up our income statement. We'll have them both open at the same time. And note, again, I can navigate typically to this bottom window and be navigating through the reports that we have open. So I'm going to go back to the report center, which I can navigate down here or minimize the pane. I'm going to go into this tab. We now want to take a look at the income statement. Now there's a couple default settings on the income statement. We have the income statement 12-month. We have the income statement for 2 years. We have the income statement. This is income statement expense for the current period and the year to date. This is one I typically will use in their default type forms. I'm going to do the same process here. I'm going to say that I want to have a range, and I want to make it for 2020, so that looks good. I don't really need the page numbers, it's fine with. I don't want to show the 0 amounts, so I don't need the 0 numbers. And then I'm going to say OK, and we'll populate that one. So here is our income statement. So if we think about what we did then, if we go back to the balance sheet, we would think that the accounts receivable should be increasing on the balance sheet. So here's the accounts receivable. You can zoom in to the AR by double clicking and using that zoom function. I'm then going to change the date range up top by going to the options up top because we're only seeing December. I'm going to change this date range to January. So we're going to go January out and say OK. So there we have that. And then if we go down to the 315, I believe this one was the one, see the Aldred Builders, and this was the 413.37. We could drill down on that if I double click on that item. And there we have our invoice. Notice it's increasing by the 413, which is the total amount including the sales tax. I'm going to close this back out. I'm going to close this back out. I'm going to bounce back over to the other report, that being the income statement now. So let's go into the income statement. We'll do the same process here. I'm going to drill down on it. I think it's going to be in the aviary and the revenues, the aviary. So we're going to be double clicking on that first item there. I'm going to update the dates again. So I'm going to go back up to the options up top, and we want to make the dates for January. Let's make it up through December here. So I'll say January through the end of the year, and then I'm going to say OK. We really only need March here, so I'm going to then go down January, March, and then here we have it. So there's the 389. So now this is going to be the 389. Notice that's not the full amount. It only went up by the amount we get to keep, not including the sales tax. The difference then should be somewhere on the balance sheet for a liability. So if we bounce back over to our balance sheet, then take a look for that sales tax liability. Scrolling down to the liabilities section, you'll see the sales tax payable. So here we have our sales tax payable. So I can drill down on that. I can double click on that item. Once again, I'll go up to the options up top, and I'll go up and take a look at the dates. So I'm going to say I want the dates, and let's bring this back to January, and then I'm going to say OK. And then I'm going to go down, I think it's in March. So we've got down in March, a lot of sales tax activity. So that's going to be the end of March. So we go all the way down here. And so we have the Android Builders at the end of March. If we double click on that item, then we have this invoice, same invoice once again. So that's going to be the sales tax. That's the liability. I'm going to close that back out. Let's close this back out. So that would be it if it was a service item. But note, we also said it was an inventory if we think it's going to be an inventory item. So if it's an inventory item, we're also going to have to deal with the inventory going down. So inventory is going to be here. So there's the inventory. Let's double click on that item. Once again, I'll change the dates up top. So I'm going to go up top to the date, to the options, and then I'm going to bring this back to January. So I'm going to bring it back to January, and then say, okay, I should be bringing it to March. Would be making it a little bit easier to be dealing with, but we'll bring it back. And then if we go way down to the end of March, I had to scroll down a lot here. We're at the end of that March 15th again. There's going to be our amount. Notice that amount, that 167.70, if I double click on it and go into the source document, it's not actually on the source document, but it's being driven by this item. So that's something we want to recognize, because we need to be able to set up that item and recognize that when we make the invoice, it's gonna also be affecting inventory if we have inventory involved. Then we're also got the other side of that, which is going to be on the income statement. So if we jump on back over to the income statement, we should have a cost of goods sold. That's going to be down here for the aviary. So let's go on, double click on that item. I'm going to change the dates up top again. So I'm going to go to the options up top so we can navigate through the dates. And I'm going to make this to all the way through. Let's just make it March this time. Make it a little bit easier on ourselves. And we'll say, okay. And then we're going to scroll down to the end of March, and there's the other side of it there. So I won't double click on it again, but there's the other side of that, the 167.70, and it's not, notice again, that's not something that's going to be, that was on the actual invoice, but it's driven by the item. Now, if we jump on over to the inventory report as well, notice we also have to track this information by the inventory item. So if we sell the birdhouse, then we also need not just to know the financial transaction, but the quantity on hand. We need to be able to support that information by the physical inventory if we're using a perpetual inventory system. So the inventory reports would also be affected. Note the inventory reports, if I go back on over to our reports, so we have our open windows in our reports. If we go to the inventory stock status report, that's going to be the inventory item that we used that I looked at right there. So just note that when you're considering the inventory, of course, then you need that supporting documentation related to the inventory. Also, with regards to the accounts receivable account, if we go back over to the balance sheet account and scroll back up to the receivables, we know that the receivables needs to be supported as well by who owes us the money. So we have the person that owes us the money. We would want a report to show that so that we can collect on the receivables. That's not going to be something in the GL. That'll be a typical other type of report. If we go back to the reports, then it's going to be under the accounts receivable, and we have many different lists or types of reports we can do here to run. But the basic thing we need to see is who owes us the money. So a common report on the receivables would be something like an aged receivable. So if I open up the aged receivables, for example, so I changed the date up top to December 31st, and then we have our information down here with regards to our receivable. I believe this is the last one that we entered. If I go on down to the bottom of this receivable report, these are the customers that owe us money. We're at the 177,517.36 for the total. If we then take a look at the balance sheet, it should tie in to the balance sheet. We're at 177,310. So it's not exact right there. There's a couple kind of reasons why it could be off a receivable. Here could be a little bit different from the aging, for like adjusting entries could make an effect on it or throw it off. But typically when you think about the accounts receivable, anytime you post something to the accounts receivable, we want to post a customer to it so that we can tie out the information that's going to be on the receivable general ledger account to the receivable information that's going to be on a detailed report by customer. So note all the kind of components that are going to be involved in the invoice. And the invoice is actually quite detailed, especially if we have the inventory that's going to be involved with all the different accounts that will be affected, as well as the things that it takes to create the invoice, including the service items or the inventory items. So that's going to be it for now. Let's get out of here.